In this video, I'll be talking about market structure and trend analysis, how you can properly identify market structure and for you to know if a structure have been broken or not. So pay attention and watch this video to the very end. If this is your first time here, my name is Paradise. I discuss everything about Forex, day trading strategy, how to make you profitable on this very channel. Support this channel by leaving a like for this video, subscribe, and turn on the bell notification for more Forex videos like this. Also check the channel for other Forex videos, educational content, and technical analysis. Right here on this very Euro USD price chart, you discover that the market is coming back to the downside with this very movement, the movement upward. And from market structure, you know that if the market is moving significantly in this very formation, we say the market is moving upward, so market is bullish. If market is coming back down in this kind of formation, we say market is bearish. That's market is moving down, creating lower lows and lower highs. Then if market is moving in this kind of formation, then we say the market is ranging. Okay, market is moving between two horizontal boundaries, which is the resistance right at this very point and the support at this very point. And we know that resistance and support is not a particular spot but a zone. Now, one thing very important about this notion is that market does not really move in this kind of way. Markets move in such a way that sometimes if you don't understand the proper market structure identification, you will fall into the trap by thinking a structure have broken when it has not. Looking at the Euro USD chart right here, if you look at this very point, market was moving upward from here to the upside, and all of a sudden market began to come back to the downside. When can we say that there was a break of structure on this very market, which is very significant? From this very move, market move upward, we see significant retracement right here. So after this very movement to the upside, the next significant retracement we see is this very one. And then afterward, we see this very impulse to the upside, and then the market begin to come back to the downside. Now, if you look at this very market, at this very point, market have not really have any break of structure. The break of structure of this very market happened at this very area right here. Okay, this is where the break of structure happened, because this is where we see a significant retracement before the market continue upward. So all of this move was an impulsive move for this very correction to happen in the market, which unfortunately turned out to be market coming back to the downside. So this is very, very important. You have to also note on your chart when you are doing market structure analysis. Now, after this, market begin to come back to the downside. There is something very significant on this chart they need to pay attention to in relation to market structure and trend analysis. From this very level, market to move from here downward, market was still in an uptrend at this very point, market move failed. Okay, so this is one of the signs that market is going to change direction. One sign, not an overall sign. Market come back down, but they not break structure, because the structure, which is our reference point, was this very area. So market move up a little bit and then come back down. This was when you can now say that market have broken structure. Which structure? This very structure right here that market move upward from in the past. So market move up from here, and then we see a break of structure around this very area right here. So this very area was the point that we can say that market have broken structure before market creates a new low, lower than the previous low at this very point. So this is the low where we can say, okay, market have created a new low, which means that market have broken structure. So you must have to be very careful when you say market have broken structure, when market have not really broken structure in the market. Now, another example here is for you to see this very movement. So after market broke structure, then we see the market continue downward. Now, if you look at this, this was the first fail swing that we have in the market. So this is now our reference point. If you look at it, This very area is the only point that market will cross and you can say market have broken structure upward. So market move down from this very area, market move down and then retrace a little bit upward, come back to the downside and then move upward, breaking this very level of resistance and creating a new high. This does not mean that market has broken structure. Okay, the real structure is at this very point where the market crashed from in the past. That is where markets have a failed swing. So this is the real structure, not this very level, because some traders out there will consider this very point as break of structure and then they will begin to look for long or buy opportunity to the upside. Meanwhile, the market is still in a downward movement. So when you see something like this on your chart, please, market have not broken structure in this kind of case. Markets have to break this very level of resistance for you to say market have broken structure and a possible movement upward is very, very guaranteed, and that you will be looking for buy opportunity. So in this very case, market move upward and then they not break this structure, which was the previous failed swing to the upside, and the market begin to come back to the downside again. So let's look at what the market do in the present. So market move back to the downside. So the next point of reference again for us to say the market has broken structure is this very area. This area is not, this very point is not. So when you are considering market structure and a break of structure, this is the only point right now that we can consider and say market has broken structure if the market move all the way from here to the upside and break this level. This is only when you can begin to look for buy opportunity because market have changed direction. Okay, so for the market to move from here to this very point, breaking this very one first of all and breaking this very other one does not mean any structure have broken. This in case all of this is one single impulsive move, and market have capacity of moving upward to this very area for a retracement before market will come back to the downside. This is very, very important so that you don't call what is not break of structure on your chart. So when you want to look at break of structure, this is the right way to look at it. Consider the previous failed swing in the market as your first point, and market have to come back down significantly, and then a move upward approaching this very area will be the next break of structure if this very failed swing is not broken. Then the next move downward, if the market did not break this very area, then the market is still in a downtrend. What that means is that even though we see this market move all the way from here to this very point, structure have not broken yet, the market is still in a downtrend. When you analyze your market this way, it gives you upper hand in the market. Now look at what will happen here. Market have capacity of moving down from here aggressively to the downside. A market can also come into this zone, not creating a new high, and come down aggressively from this very point to the downside without creation of a new high above this very point. So this is very important. So in this very case, we can only say that market have broken structure if and only if this market rise from this very point where the market is right now all the way here and create a new high higher than the previous high at this very point. That is the only time you can say that market have broken structure on your chart. This is Euro USD, for example. Now, if you look at USDJPY, if you look at this market move all the way from here upward, and then we have this very move downward, and the market stay here for some time, the market begin to move upward. Now, I can boldly tell you that we have only two impulse here, very significant impulse. We have this first one at this very point from here to the upside, and we have the significant retracement. Then market begin to move to the upside from this very area, but you cannot really say that is this very area. Market move from this very point for the next impulse. So you can also say market move from here upward, okay, and then the next retracement can come into this very point. What I am saying is this: for you to say market have broken structure, we must have to see market break this very area, because after this point market come back down a little bit, and then from here market moves significantly upward. So this is where the next impulsive move come up from, at this very point. So if we see the market go down below this and this one, market have not broken structure yet. You need to pay attention to what you are seeing on the chart. The real structure will have to break at this very point, which is where we see the beginning of that very strong impulsive move to the upside. This is very, very important, and that must be followed by a fair swing in the market. Very important. So in this very case, if you want to say the market have broken structure here, market have to come back down from this very point into this very area and create a new low below what we are seeing right at this very point. Once we see a price that go below this very area to the downside, then we can say market has broken structure. So therefore we can begin to look for sell opportunity when market retrace to the upside, for market to come back to the downside, for us to sell the market downward. So this is very, very important. So in this very scenario, you must have to pay attention to things like this on your chart. So for market to come back down and break this level of support does not mean market has broken structure. If market come back down as well and break this level of support does not mean market has broken structure. Until market come back down and break this very level of support, we can now say market has broken structure. Why? Because all of this is considered as one impulsive move in the Elliott wave theory. This is very, very important to your understanding of market structure and if structure have broken or not. So in this very case, if we want to say market has broken structure, you have to pay attention to this very thing on the chart right here, as I explained. So from this very area, what I will want to see right now for any sell opportunity is for the market to come back down, first of all, and then we should see a fail swing in the market. Market have to come back upward, fail to create a new high at this very point is very significant, and the market should come back down, create a new low. Once we see this kind of pattern formation, market creating a new low, and this very structure have not been guaranteed that this one have been broken because market have created a new low at this very point right here, then market have to retrace for us to now think of taking a sell opportunity to the downside. So on the other hand, for us to say that market has broken structure, if the market begin to come back upward, market have to break this very level where we have the first fail swing on our chart. This is very, very important. This is how you properly read your market and know certain structures that should be broken before you can say an uptrend have ended or a downtrend is beginning on your chart. This is very, very important. I wish I know this when I started up in trading. If you apply this practically on your chart, you'll begin to see a change in the way you read the market right now on any chart. I believe this video have really explained what market structure is and when you can say the market has broken structure and when it has not. Please support this channel by leaving a like for this video, subscribe, and turn on the bell notification for more forex videos like this. Also check the channel for other forex videos, educational content, and technical analysis. If you want to learn how to trade forex professionally like this, please check the description of this very video. You see a contact and reach out to me and enroll for the forex bootcamp. If you have not registered with any broker, I have a recommended broker for you in the description of this video. Check the link in the description and register right now. Thanks for watching today's video, and I will see you in the next video.